Well, I don't have the update on the market, but maybe you can perhaps shed some light on how the market ended in today's trading session.
Basically, what we've been able to see that the NSE has really been performing pretty well. For local investors, it's actually been a seller's market. For foreign investors, it's been a buyer's market. We've been able to see, key particular stocks actually being able to sustain the drive. Many analysts actually saying that the bull run that the NSE has actually shown has been the highest in the last 9 months. So we've been able to see it's sustained its performance above the 4,000 mark. Though yesterday it did drop a few points back to 4,171, but today it went up another 10 points. So this is an indication that indeed, given the impressive results that many listed firms have been posting this quarter, is to show that the market has matured. It's been able to navigate a lot of political issues and a lot of economic related issues that have an implication to policy framework that actually emanates from politics. However, we're able to see that a few stocks that have been able to push this up, especially when you're looking at the 20 share index. We're looking at Safaricom, EABL, Barclays Bank, and at the end of today, basically you're able to see that the bull run is actually going to be sustained, given the fact there's a huge appetite for investment. We've seen few banks and insurance firms actually listing the rights issue, and they've all been oversubscribed. This shows that there's a lot of appetite for investment. Kenyans are looking for investment options out there, and they have a lot of money, and they're looking for places they can actually be able to put their money in secure investing places.
And when you look at the NSE 20 right now, it's up over 29% year to date. Let's just talk on a stock like Barclays Kenya. We have seen Barclays out with results. So we're only seeing 9 months profit edging up by 5%. However, when you compare it to its competitors who came out with a double-digit growth, Barclays are not performing too well there.
Actually, it's not just Barclays is not performing pretty well, because in looking at the 4.8 increase in the last 9 months, we're able to see that when you compare it to other bigger performers like KCB, Equity, Stanchart, you're able to see that the banking industry is actually changing. They've actually reached an optimum in terms of how they can be able to bring in profits. So the only thing is to be able to tighten the loops in terms of reducing cost of operation, in terms of ensuring that the expansions they've been doing in terms of branch network within and without the country, they need to start now, bring in the results. And the most important one, they need to actually come up with more innovative products, because we've been able to see that the mobile aspect has actually been the driving force in terms of returns, because it's significantly reduced the cost of operations, but also this has actually been maxed out. So we're able to see Equity first released the results. They're pretty low. We've seen that the Barclays is actually one of the big banks to actually do single-digit growth. We're able to see that another bank, National Bank, which has a lot of government support, dropping in terms of profit growth by 67%. So it shows that in terms of returns, banks have reached the maximum in terms of how they can be able to get the profits. So it's time to come out and come up the new strategies to get out there in terms of loan performance, mortgage products, how to be able to reduce cost of operation, and this is key. And also you've seen that most of them did actually do a lot of branch network. So it's time for them to actually ensure that these branch networks actually now start bringing in money.
Well, let's just cast our eye into next week's trading session. What can we expect there? So further momentum on the market?
At close of today, we actually saw that Safaricom reached a high of 5.94. This was higher than its IPO price 2-3 years ago. So you're able to see that the momentum that Safaricom has actually been showing on the market is heavily significant. And you've been able to see that Safaricom affects the market on any given day. It's the most highly capitalized stock on the NSE. So with the current impressive performance that Safaricom has actually been going on, with the continuing consolidation of the shares, which has been one of the key issues to be able to see Safaricom actually rally beyond the IPO price. We're able to see that this, with the continued foreign interest, will actually rally and keep pushing up the performance of the NSE, because any number of shares Safaricom moves will have a positive or negative impact on the 20 share index. And given that it's the primal or the yardstick of measurement on how the 20 share index performs, we're looking forward to seeing that the NSE actually performing better, and maybe for the first time the telecom industry actually trying to see move forward in terms of showing results for positive rewards to its investors.
All right, let's move on to the business relationship between Kenya and South Sudan. We have seen a bit of a US dollar crunch there that's really making Kenyan businesses grind to a halt and as well affecting exports in the country. Talk us through what you're seeing right now in terms of that relationship.
Actually, the interesting thing is that it's shocking to realize that Kenya and Sudan don't have an agreement whereby the Kenyan currency can actually be traded in Southern Sudan, given the historical aspect that the two countries share. So this actually brings in the issue of what are the both foreign policy and legal framework policies in terms of how the two countries can actually trade. Because as of last week, we saw the Jetlink airline actually grinding its services to Southern Sudan, saying that a lot of its money, 170 million, being held up there because the Southern Sudan is actually having a USD, availability issue due to its own internal affairs. But then, as of this week, and close of our business today, realize that many companies exporting their products and goods to Southern Sudan actually stopping, the business to that place because business can continue. There's no availability of funds. The local Kenyan currencies it's not acceptable in that country, and this is actually raising a lot of concerns in terms of just what kind of legal framework or sustainability kind of relationship the two countries share. And we're waiting for Treasury, waiting for Central Bank, and to come out and actually be able to explain this, because given the fact that we've been able to, as a country, been able to pioneer peace in that country, been able to see, offer them homage in terms of trade, we've been able to give them a lot of support in terms of infrastructure, consultancy services, professional services. For this to happen, it's actually negatively impacting Kenya. And you're seeing that a lot of businesses are losing more than 100 million USD per day, just in terms of not having business going on. And you've seen that many companies are now looking to Ethiopia as an alternative aspect to export goods, given the fact that when you look at our numbers, Kenya is a net importer. So our major trading bloc partners like Uganda, Southern Sudan, and when this happens, it's a serious business crunch for us. So a lot needs to be done, and especially in terms of just creating a legal framework to ensure that our currency can actually be accepted in Southern Sudan.
Indeed, so a number of companies are feeling the pinch right now. Let's talk about the telco industry in the spotlight right now, and talk us through some of the survival tactics that some of these telco companies in Kenya have had to employ in order to survive.
We've been able to see that the last quarter, Safaricom, Airtel were actually fighting in terms of voice pricing issues, and companies like you actually went to actually having 0 rated voice calls within network. And many were asking what model actually was this in terms of being able to sustain business. And this quarter, we've been able to see that Safaricom actually decided not to, do that and actually just increase its voice rates, and this actually paid well for its returns. We're seeing Airtel has announced the same. We're seeing you is actually relooking at this issue. So you'll be able to see that they're realizing that for business to survive, they have to increase prices, they have to increase rates. Safaricom today has actually upped its regional voice rates. We've been able to see that with an emerging middle class that's actually they have an affinity for data. Internet subscription and products and services have been the bane of survival for most of these telecom industries, and you've been able to see that this and money transfer services is the issue. However, with the Treasury planning to tax 10% of money transfer, given the fact that mobile money services have been able to move $1 trillion in this quarter alone. It's a huge market. It's a huge opportunity for KRA, for the Kenya Revenue Authority to actually be able to tax. But then you're looking at ways for them to survive. So they continue to be innovative, especially in terms of data. And the other thing is the only way they're going to survive is now to increase their voice rates, because now people are actually opting for data. So voice rates will actually become an optional or luxury thing. But question is, for how long? Because we've seen that Airtel had been given an option to look for a local partner for 25% stake, and they've failed to actually get a local partner for this. So we're in the coming quarter is actually going to be very interesting in terms of how the telco industry are going to survive, because one, the requirement by CCK that local partnership is actually key in terms of sustainability, accountability, and legal issues.